Joseph Healy is NAB's head of business banking. In a recent speech, he exploded the myth that banks are looking after business customers, and he dropped a bucket on a system that is starving businesses of capital and is bad for growth, bad for jobs and bad for the country. I asked him to explain what's happening and why. Well, Joseph Healy, one of the stunning things in your recent speech was the revelation that 10 years ago it was basically dollar for dollar between lending for housing and lending for small business. And now every $1,000 that goes into housing, there's only $600 going into small business. So that really confirms what everyone's been saying in small business, that there has been a shrinkage of lending to SMEs. But why has that occurred?
Well, I think, Alan, there are a number of reasons for that. I mean, there's been a significant growth in the amount of lending to households, in part due to the introduction of Basel II capital rules in 2007-2008, which made it capital attractive for banks to lend to households as distinct from businesses.
Do you mean that housing or property attracts or needs less capital behind it for banks to lend to?
Yes. So banks on average can do 3 to 4 times more lending per dollar of capital into households, into mortgages, versus business. So household lending has become much more attractive for banks, and we therefore saw a significant shift in the allocation of capital towards the household sector. And we've seen that, of course, in the level of the growth in the level of debt in the household sector, which went from about $280 billion 10 years ago to about $1.1 trillion today.
But that surely wasn't the intention of those new rules, Basel II rules.
Certainly not the intention. I mean, the intention of the Basel II rules was to recognise the relative riskiness of lending, and so therefore historically household lending has been lower risk than business lending, and lower risk lending attracts lower levels of capital. So that was the intention, but one of the unintended consequences of that is we've seen a significant shift, quite a significant shift towards household. Now, there's nothing wrong per se in lending to households, but the issue is making sure that we're also lending to businesses, and particularly small businesses. We mustn't lose sight of the fact that small businesses are the engine room of the economy. They employ close to 7 out of 10 working Australians. And I believe our future prosperity really depends on having a strong, vibrant small business sector. And the fact that small businesses feel that the banking system is not working for them, and that's certainly the voice of small business, that, to my mind, is a big concern.
But individual governments, including the Australian government, can't really do anything about that. I mean, the new banking rules cover the entire world. So what can a government or anyone do?
Well, I think it's an important national discussion for us. I don't think it's a discussion that is narrowly based on the banking system. It's an important discussion about the kind of economy that we want to build, the role that we see the banks playing in that economy, and the future of the small business sector. So I think government does have a role to play as part of the discussion. The banks have a role to play, obviously. So do the bank regulators and the Reserve Bank, and of course the various representative agencies of small businesses in particular.
But it's one thing for governments to facilitate discussion on this, but words are not going to solve the problem. What can governments or anybody do to solve it?
I think it's important that we recognise it as an issue, because then we can start addressing it. And certainly when you listen to the voice of small business, as I mentioned earlier, it has been quite strong and quite consistent now over a year or longer, in the sense that the banking system today is not serving their needs. And we need to kind of ask ourselves, what is it we need to do? And what are the reasons behind this issue? And we can recognise, of course, that we have one of the strongest banking systems in the world. So a legitimate question is, why, given that, do our small businesses feel poorly served by our banking system?
Well, indeed, and in fact you're not only raising the question of the relative lending to housing and households and small business, but also the overall funding of the system in Australia in general, because you seem to be suggesting that if the lending continues to grow at the current rate, the world is going to not supply Australia with the sort of capital that's required, which will mean that the banks will have to pull back, in fact shrink their lending overall.
Well, this is actually quite a big issue, and it's linked to the whole question of financing the business sector. I mean, we are a significant borrower of international funds to fund the banking system and our current account deficit. Close to 60 or 50 cents in every dollar that we lend is borrowed, and the bulk of that from overseas. that the forecasts that have been made by commentators on the future borrowing needs of the banking system are quite significant. And we have to recognise that there could be an issue in the sense of the appetite of international investors to the amount of Australian paper or investments they might want to make, particularly given the competing demands of other governments and other banks and other corporations around the world. So we today constitute about 2% of the global GDP as a country, and we have to accept that at some stage there might be a limit on how much financing the international markets are willing to give to our banking system. And of course, the extent to which there are limits imposed, then that could act as constraints on the capacity of the banking system to lend. And the current banking rules, as I mentioned, the Basel II capital rules, create an incentive to lend the marginal dollar more towards the household sector than it is towards the business sector.
So that would suggest an even bigger crunch on small business.
Indeed. In fact, today we have the almost perverse situation that in a world of scarce capital, that it's more attractive to lend that to a weekend holiday home than to lend to a small business. Now, that clearly is not good for the economy, and therefore it's an issue that we should discuss and start thinking about how we're going to solve, rather than waiting for that problem to crystallise.
Thanks for joining us, Joseph Healy.
My pleasure.